Welcome to the Investing with A-Aron channel. I am A-Aron, and my channel focuses on sharing my investing and financial knowledge with 25 years of investing. And I've obviously made many mistakes along the way, and much like life, the ability to learn from those mistakes early without costing too much money along the way is the key to investing. So, a little bit more about myself. I do have a Bachelor of Science, a major in mathematics, and a minor in accounting. So, I have done a lot of work with numbers, number crunching. So, if anybody has questions on number crunching or anything like that, just give me a holler. I do have experience also with taxes, so I want to share some of that as well. My hobbies do include long distance running, and actually, I have ran 16 miles today. And yesterday I ran 15 miles, so I do I like long distance running. It keeps my mind healthy, keeps me on the go, and it gives me that energy. I feel healthier, and I don't gain too much weight as I have been lately. And hopefully, I can keep that weight down. So I do want to incorporate more fitness-related knowledge that I have experienced along the way to investing, because it really keeps your mind, like I just said, healthy and making good and smart choices. So I think I will incorporate some of that along the way. I actually was considering that when I did a long distance run. It actually came to me. I'm like, man, I need to incorporate some of this fitness knowledge with investing because they're so the same. So, and also what I'm going to discuss is that I have been buying. I just bought new equipment. I bought a new mic, and I'm using some new video software. So if you guys can give me a description down below of how the video and audio sounds, I'd much really appreciate it. Trying to get everything together is the first steps. So, all this research I put together, I want to present it well. So, I appreciate that. And then at the end of the video, after I go through my portfolio, and I will go through my portfolio currently in my brokerage account, and after that, I will go through and reveal my stock pick that I bought last week. And it's a good stock pick. I probably will be growing more in the future. So, started on my portfolio. So, as you can see here, I've got the column for stock symbols, column for stock names. Cost basis is basically the price that I actually paid for the stock over a certain amount of time. And I bought these a lot of times, so this is my cost basis. But the current price, which is the current market price at this point. And then I've got a column here for the stock gain loss percentage. This is how much I've gained and lost in a particular stock. And the dividend per share. And then I calculate the current dividend yield from that. And this is how much makes it out of my portfolio. And then I've got the trailing 12-month PE ratio as well. And then some notes here. And then we'll just go through it. So, of course, my top holding is Chipotle. Ticker symbol is CMG. And currently, I'm up 353.58%. So I bought this a long, long time ago, probably about 6 or 7 years ago. And these last couple of years have just rocketed with the new CEO of Chipotle. And it's really took off. So I think this last week it was like $1,300, and it just shot up last week. So I'm making a very good investment. I'm staying long on this. I don't plan on selling this anytime unless something really definitely changes with the stock. But I'm not going to buy it anymore at these inflated prices. I think right now it's just getting too overinflated, and I'm going to stick with that. So I've got 26% of my portfolio in Chipotle. And of course, the PE ratio is 152 trailing PE. Of course, they're growing like crazy, the sales and earnings per quarter. So I didn't factor in yet the forward PE, but it's going to be a lot lower than this, but it's still going to be a lot higher than other fast food restaurants like McDonald's and Wendy's and other restaurants. So it is growing like crazy, but at this point, I just don't want to buy anymore. So my second largest holding is iRobot, ticker symbol IRBT. I've got a 30% stock gain on this. I've owned this for about 3 years, up and down. I think this got as high as $130 a few years ago. It's kind of went down to like the mid $40 range, and now it's back up to about 83, so right in the middle of it. I still think this is really undervalued. I bought some more shares a couple weeks ago, and I've got my percentage of my portfolio up to 17%. Um, and the trailing 12-month PE ratio is 14.51. So really, really low PE ratio, and I really think this is a good one to own. And I think they're going to have a big Christmas holiday. Let me go back, because they actually make the Roombas and the Bravas. And I really think they're going to have a big Christmas this year. People are going to want products for their house to clean. And I think this is going to be a very good sales event this Christmas. So I think it is undervalued compared to other stocks. And robotics is really going to be the future. And I think they're going to benefit from that. My third position is the Schwab Market Index Fund. And I have 16% of my portfolio. This just gives you a broad exposure to the entire index. Fourth position is General Motors, ticker symbol GM. And I've got a 25% gain on this. And it makes up 5% of my portfolio. They're doing really great lately, coming out with the newest Hummer that they came out with the EV market. And the EV market is really going like crazy. I think it's going to be the future. So that's the reason why I stayed with this stock. I'm glad I did, because the last few months have been excellent. So I really think they're doing really well in the EV market, and they're going to be the leader. So I'm going to keep this here. I haven't bought any more shares because it has recently kind of went up pretty good. So I'm just going to keep this, and hopefully it does good. Next stock is Disney, which is ticker symbol DIS. I've got a stock gain of 33%, and it makes up 4% of my portfolio. I think as this virus starts going away and people get the vaccine, I think the parks are going to do a lot better. They're going to be opening. They're going to attract more visitors. So I think that's really great. They're really, the big thing on Disney is their streaming service. And they've hit over 137 million global paid subscriptions. So I think that is the future. The future is the streaming service. And I think they're going to continue doing really, really well. This is what I'm banking on. It's done really well for me. I've only bought this like a few times this year, and it's already up 33%. So I'm doing really, really well. I think I will probably buy more if it drops down to the 160 range, but I'll keep you guys updated on what I do on that position. Next stock is AT&T, ticker symbol T. I have a stock loss percentage of 4%, and this is really one of the only ones that I've really lost on. There is a few down here. We'll get to that. But it has a current dividend yield of 7%, so it's got a great dividend yield. And it makes up 4% of my portfolio. I think the HBO Max is doing pretty good, and that's going to be their strong suit. Their Warner Media division is going to be good for them. If they can actually sell their DirecTV get what they can out of that, I think that'd be good, because then they could keep their business more growing, get rid of their stagnant businesses, and start growing for the future. So I did hear about how they kept their dividend the same, and that kind of worries me, because it's like, what are they hiding here? Because they've done this since 2006. They've raised their dividend every year, and then all of a sudden they just kept it the same dividend. So that kind of makes me worried a little bit. I'm going to keep this the way it is. I'm not going to buy anymore just because of that reason. But if it does fall between the $26 range, if it gets down there, I might purchase some more at that price. So the next ETF is actually Vanguard Total Bond Market Index, and it's got the ticker symbols BND. It only makes up 3.9% of my portfolio. I've got a 3.5% stock gain at this point. So this gives me a little bit more conservative approach. This is an intermediate term bond with most in the treasuries, but some in the corporate bonds. And then I've also got the next position is Vanguard Short-Term Treasury ETFs, ticker symbol VGSH. And it makes up 3.7% of my portfolio, and I've got a 1.6% gain on this. And again, but this one's actually short-term maturities. Bonds right now are low interest rates, and that's the concerning point is when those interest rates reverse and go higher, that's going to cause the bond prices to go down. So I'm really keeping a good eye on this. I thought about back in March to get rid of these two bonds and put it into equities, and I didn't do it, and I kind of regret that now, but it kind of gives me a balance in my portfolio, so I really just going to keep them for now. If we see the next drop, I think I probably will get rid of these and buy equities. So my next position is Newell Brands, ticker symbol NWL. I've got a 29% gain at this point, and it makes up 3.6% of my portfolio. This gets a nice, juicy 4.49% dividend, and it's an all-around company, really, consumer brand company. It owns Craftsman, it owns a lot of different brands, and I started buying this about 3 years ago, and it's had a wild ride in price. I mean, it's just up and down, up and down, up and down, and it's doing really well right now. 29% stock gain. That makes it about a 10% gain per year, and I can go with that, and that's not even including all the dividends I received. So I think this is good for the future. I'm just going to keep where it is now. I think it got down this year to like around $11. Now it's at $20.60. So I'm going to stay kind of stagnant, not going to buy anymore at this time. So next largest stock is ExxonMobil, ticker symbol XOM. It has an 8.12% dividend. A lot of these oil majors are really got some high dividends here. I am down 14%, but I have been lower dollar cost averaging along the way the last year or two, and getting that cost basis down to $50.25. So current price is $42. I'm going to stick with this. I'm not buying it anymore at this time. It is risky, but I think over time these oil majors are going to come back. Next stock in my largest position is General Mills, which is ticker symbol GIS. It's a good safe at home stock. They bought Blue Buffalo a couple years ago, and the pet industry is really booming. I mean, people are going to do anything for their pets. So I think that's going to be very good for General Mills. They particularly rebranded that product. You see the Blue Buffalo and sold it at Walmart, Target, everything. So they completely just took that company and Blue Buffalo and really done really well with it. So, and I also like it that's got a low PE ratio of 16. I will consider buying some of these if it gets a little bit lower in price, but I do have a 43% gain on this. Next stock is 3M, which is ticker symbol MMM, and I am up 21%. It's a 3.3% nice industrial stock to own, all around industrial stock. And they really got into the massive amount of masks sold, with all the contracts they got from the government with the mask. That's really done really well for their portfolio. And I really think viruses are going to happen in the future. I mean, that's just the way we live in it. And it's going to come back, and they're going to benefit from that. So it does make up 2.3% of my portfolio. Trailing 12-month PE ratio is 20, which is very low at this time. I mean, not real low, but I mean, it's average. Next stock is Johnson & Johnson, ticker symbol J&J. Of course, this is one of the juggernauts of the healthcare industry, the great diversified healthcare industry. It only makes up 2.3% of my portfolio. This is when I really want to get up back to the at least the top 5 or top 6 over time. If it does drop down below 150, I will definitely be a buyer. I've got a 16% gain at this point. Next stock is Royal Dutch Shell, ticker symbol rds.a. and I've got loss 26%. Of course, this is a loss just like I had on ExxonMobil, and it makes up 1.2% of my portfolio. And I think, again, I think the energy, the virus, when it goes away, you're going to have a lot more demand in energy, and it's going to come back up. Next stock is General Electric, and I've had this for years and years. And I am down 14%, but this came back. It was down to around $6, and now it's at $10.81 this year. And I was considering double down. I didn't double down. I wish I did, but of course, that's hindsight, and I didn't do it. So I still have a 1%. It just only makes up 1% of my portfolio. But I think they're going to be really good on renewable energy, windmills, and that's their future. So I think they're going to turn around. Their CEO is going to turn that company around. Next stock is Unilever, which is ticker symbol UL, and I have a very small position, 0.88%, and a stock gain. I've only had this for probably 5 months, and I've got a 6% gain here. Of course, this is a consumer goods company. They have a mix of personal care and food products. So pretty good sized company. So my next newest stock pick is what I'm going to go over now. Let me scroll down here. This is the stock I bought last Wednesday. It is Axon Enterprises. Ticker symbol AAXN. And this has been a stock that I've owned in the past a couple years ago. I made about 150% gain from it. Then I sold it around the $69 range in that area. Now it's $125. And I bought it at, when it dipped back last week at $119.85, I bought it, and I'm already up on that position 4.5%. So that was a good timing effort on my end to see that. I've only got a 0.73% ownership of this. I am going to be buying this every so often to get back to my original position when I sold it off. That's how many shares I'm going to get back. So this is going to be constantly, I'm going to be buying this. It's going to probably move up the leaderboard here. And then I've got a little bit of cash here, 0.11%. I don't have anything on cash, but I'm going to be continually adding to this brokerage portfolio over time. So you may be asking what stocks I have on my watch list. I'm still eyeing the PFE Pfizer. It has came down quite a bit. I think I probably will put more money in it because it has come down a lot this last couple weeks. And I think they're going to be, again, they're going to be the top leader in the healthcare stocks as far as the viruses, and they've got their own vaccine. So I think they're going to do real well in the future as far as long term. And then AbbVie, which is ticker symbol ABBV, they're also going to be very good in that, and they both have very good dividends. And I really need to add some of that to my portfolio. And then again, Axon, I've talked about that. I'm going to continue buying that. And then Beyond Meat, which is ticker symbol BYND. I have not done research yet. I want to get back in there and do some research, but this is a high growth flying stock. And they have came down quite a bit from their high, 52-week high this year. So I think it might give a little interest to buy it, just to buy a little more, to speculate, because plant-based foods is going to be the future. I mean, a lot of people are eating meat products, but plant-based is going to be the future. It's going to come back. So this is my entire portfolio. What I'm going to do is probably do more deep analysis on some of these stocks, and I'll do a full video on each of these. But I just want to keep this video pretty short. But go ahead and comment down below if the video and the audio comes out a lot better than my prior videos, because that means that I'm doing things right and I'm getting the right equipment. So I appreciate everybody watching me, and we'll see you on the next videos. And also, please subscribe to the channel and like the video. That really helps out. And thank you guys a lot. Have a good day, everybody. Bye. Just a quick disclaimer. I am not a licensed financial advisor, so this is just for entertainment only and education only. So please do your own financial research.